Hey everyone, this is Kenny and welcome to this video. In this video I'm going to be teaching you or showing you the system that I am currently using. A lot of people have been asking me, what system do I use? Make a video about what you're trading. I want to know how you're doing it. And really, the system that I am trading, it's out there for free on YouTube. You don't really need this video. But since you are really asking for it, I'm gonna make it. I'm gonna explain it to you, and yeah. So essentially, um, I trade 1, 2, 3. That's the system that I use. That's the strategy name. That's the name of the model. 1, 2, 3. The creator of that system is Pepe Thug Life. So all credit goes to him. You should be watching his videos right now instead of watching mine. But here you are. So if you already watched his video and for some reason you still do not understand, well, I'm trying to. This video is not going to be something different from his video, but maybe the way I teach can help you. So hopefully it does. But really, Pepe Thug Life, his videos are so simple, so straight to the point. I mean, I don't know. I don't understand how some people do not understand his videos. They're so easy to understand. I mean, maybe some of you guys are not putting the you're not putting the time. You want to learn something that will change your life, but you don't want to put time into it. You want something easy, 1 2 3 minutes, and then you're gonna be profitable. Maybe some of you guys, that's what you're expecting. If you're that guy, get out of this video because you're not. It's not gonna work. It doesn't work like that. You see, I started trading this system 2 weeks ago, and I have watched most of Pepe's videos. So I didn't just watch one video and then I was done. No, I watched hundreds of hours because this videos that I've watched. You can see that I watched them. These videos, I didn't watch them once. I watched them 1 2 3 4 5 times. This video right here, I've watched it maybe like 10 times. And I've watched most of his videos, his old videos too. Some of them I still haven't watched them, but the majority of them I have watched them already and multiple times. So if you want this to work, you better know that one video is not enough. You must know that watching it one time is not going to make you profitable. You have to put in the reps, just like I did. And I've had a lot of success with this model, not because the model is the holy grail. No, I put in the effort, I put in the work. The model is easy, so it makes your life easier as well. But you have to put in the work. If you're not willing to put in the work, this is not gonna work. And you better get out of this video because if you have that mindset already, it's not gonna work. If you're strategy hopping right now, it's not gonna work. You have to dedicate your time, effort, and energy into learning this because this system is very simple. Now, I have to say something as well. This system is not for everyone. This system is working a lot for me because I don't know, it just fits me. It just fits my personality. It fits the way I am, the way I trade. Maybe it's not going to be a good fit for you and you're never going to understand it because it's not for you. So that's completely normal as well. But I hope that this video can help at least one of you guys. But like I said, right now, instead of watching this video, watch Pepe's videos first and watch all of them if you can, or the majority of them. So that way you understand how the guy that came up with this model teaches it, and not a guy that is just um, explaining his own interpretation of the model, right? So all credit goes to Pepe, and I also want to give a big shout out to Stoic Trader. He's also a guy that has helped me a lot in my trading career. I have learned a lot from him, and a lot of things besides 1, 2, 3. A lot of other things that I look for in the charts are because I learned it from Stoic. A lot of things. I swear to God, I learned so much from this guy. So a lot of credits goes to Stoic as well. All right, but both of these guys have YouTube channels, so you can go and learn from them. Everything is free, right? So, what system do I trade? If I can explain it in a simple drawing, it would have to be like this. if you don't know what un dos tres is, then you have to go watch Pepe's Duck Live YouTube channel first. So I'm not gonna sit here and explain what is un dos tres because you should already know, because you should watch this guy's videos first. So essentially, un dos tres is gonna be 3 swing points that respect each other. This is uno or 1. This is 2 or dos. This is 3 or tres. Right? Un dos tres. And what is common in between all of these swings? Like I already mentioned, each swing respects the previous one. What that means is that, I'm out here speaking Spanish. What that means is this low right here does not sweep that previous low, and this low right here does not sweep the previous low. Un, dos, tres. 1, 2, 3. That is it. That's all you have to look for. And same for the other way around. Un, dos, tres. That's it. That's it. You already know what this means, so I'm not going to sit here and explain what un, dos, tres is. So let's get right into the charts and show you how I look for un, dos, tres, because I think that's the main thing a lot of people are having issues with. They don't know how to start counting un, dos, tres. It's so simple. You're overcomplicating it. So, first of all, I trade after 10:30 a.m. Why? Because I don't like all this volatility, and also I don't like to get stopped out that early in the morning. So I rather just wait after 10:30. I already saw what the market is trying to do, so I can just capitalize on any of the trades that are left throughout the day. All right. So un, dos, tres. Right here, don't overcomplicate it. Look, right now I'm seeing 3 swing points right here. This swing point, or this swing point right here respects the previous one, and this swing point respects the previous one. How do I know? Because none of them sweep the previous swing point. So I'm gonna mark each swing point with these little circles. That's 1, that's 2, and that's 3 right there. Un, dos, tres. You see how each swing point respects the previous one? I'm not out here overcomplicating anything. I'm not out here saying, oh, there's a fair value gap right here. I like this system, or I like this setup because it respects this fair value gap right here, and I also like this trade because there is a huge order block here, and the 50% aligns with the fair value gap, and I also see here that the market opened at 9:30, and the 9:30 made the body closure of the 9:30 was right here, so that's also aligned with these. No, don't overcomplicate this. I'm not looking for anything of that. I wasn't once in that point, and it's not necessary. Don't overcomplicate this. Just count un, dos, tres. That's it. That's all you have to do. And one thing I like to add to this system that helps me with my bias is the Stoic EMA, or Stoic moving average combo, which is the 20 and the 200 moving averages. I add it to my charts just because I like to see what's the trend, how we're trending. I mean, if the price trending higher, is the price trending lower, is the price consolidating or accumulating? What is the price doing? And here we can see that the 20 moving average is above the 200 moving average, and we're trending higher. The 200 moving average is slowly but surely going up. So what that means we are in an uptrend. So what that means also is that you want to be looking for trades alongside the trend. Like a lot of people say, the trend is your friend. You can look for counter trend trades, but you're gonna pay the price eventually. So make sure you stick with the trend, and the moving averages will help you with that. So if you want to add that to your charts, I would recommend you to do so. So un, dos, tres. Now, why do I pick this un, dos, tres? Why is this not my uno? Or why is this not my uno? Because, like I said in the drawing previously, I like to look for deep retracements. I like to look for extremities, like Pepe says in his videos, extremities. He emphasizes on extremities a lot. He likes to look for extremities. So what is an extremity? I mean that's just the extreme of a swing point. So this, to me, this swing high and this swing low is a swing point. What's the extreme of this swing point? this last down close candle. The open, here's the market open, came back to this candle, to the low of this swing point, and it respected it. It shot up higher. So what that means is that this is a 2, right? Because it respected un. So this is 2. And here we have a swing point, right? If we extend that, if we mark that swing point to the right, and we want to look for longs, we just wait. We wait for the price action to come back into the extremity of their previous swing point, and we wait. Once the price is here, we just don't enter with a limit order, right? We just don't enter here, stops down there, take profit up there. We just don't enter blindly here and say, okay, once the price reaches this square, I'm just gonna enter. No, you don't do that, or at least that's what I don't do that. I wait for confirmation. So once the price comes back into the previous swing, I wait for two things. I either wait for a liquidity sweep or a turtle sweep, right? So there has to be a low somewhere in here, and if I see a sweep with a violent break to the upside, I enter market, right? But here there's none of that. There's no low. I mean, there's this low right here, right? This one right here. But is this extremity? That's what you have to ask yourself a lot of times. Is this the extreme of this previous swing point? It is not. It's just barely tapping the high of this box. I like to see trades that come at least to the 50% of the box, because that way I can see that the price really pushed to the downside before going up again. So this is, to me, this is not extremity, so that's why I didn't even look or consider this as a trade. I wait for the extremities, and you see this down close candle that actually made extreme, right, or the tres, broke below the 200 moving average. But look what it does. Look at what the price does next. It comes back with a lot of strength and invalidates this candle, right? And also look what the price forms. It forms a breaker. This little box that I'm marking right here, let me delete this one. This little box that I marked right here is a breaker. So once you see this confirmation, right? Personally, I like to enter on a confirmation candle. What is a confirmation candle? A confirmation candle to me is either a engulfing candle. If you do not know what an engulfing candle is, go and search it on Google. I enter on an engulfing candle, or a pin bar, or a hammer candle, whatever you want to call it. So right here, let me zoom in. Now that we know that we have the 1, 2, 3, we have all this confirmation, and we already broke above this breaker, I see this confirmation I see this, yes, this confirmation candle. To me, this up close candle is an engulfing candle. Why? Because you can see that this candle, right, this one, swept the previous candle low. Right there, if we zoom in, we can see that it swept that candle, right? And then not only that, it, with the body, it almost fully engulfed the previous candle. I'm not really as specific. I mean, right here, as you can tell, this body closure is not really above the previous one, but I'm not really a, you have to understand something. Trading is not a science. It's not like, okay, this has to close above all the time. No, I leave the trades a little bit of guesswork, if you could say, uh, if you can say it in some type of way, or I'm a little bit discretionary sometimes, right? This body did not close above this one, but the wick did. So to me, that's an engulfing candle, right? So I would enter market above or at the body closure of that candle, and my stop would be below the breaker or below this low. But it depends on the trade, right? In this case, below this low, it would have to be a very big stop loss, so I will reduce it here, right? And I would enter there. And also look, this candle that we're entering on, it closed above the 20 moving average, so that gives you an even extra confluence to the trade. A lot of people ask me, how do I add, or how do I use the moving averages with 1, 2, 3? This is how I use it. I use the 200 for bias, and if we close above the 20 moving average, I like that even better. So it gives me extra confidence. So I would enter here, Or I would have, if I didn't enter on this candle, I would enter on this candle right here, on this down close candle. Why? Because this down close candle looks like a pin bar to me. It came back, tap into the breaker. This candle also did, but this one as well. It tapped into the breaker and it also swapped the previous candle. So it's not only a tap of the breaker, it's also a sweep. And it's a sweep with a nice body or a nice candle, a pin bar or hammer candle, whatever you want to call it. And it also, it's very close to the 20 moving average. All of these things that I'm telling you are the things that I look live when I am looking for a trade. Everything that I'm explaining right now is what I actually look. Right? So if I didn't enter in this candle, I would enter on this one right here, right? Stop loss below the breaker, and I always target 1-to-1 trades or 1 hour trades because that's just what I feel more comfortable with, right? Sometimes you can look for even better risk to reward trades, but personally, to me right now, I feel comfortable with 1 hour trades. Maybe in the future I will start looking for bigger risk to reward trades, but for now I just want to stick to 1 hour trades. That's what I feel comfortable with, right? So here, if you entered here, I would have entered on that candle or this candle right here, and my target would be this low hanging fruit, this high right there, right? And that's a 1-to-1 trade or 1.16 hour trade, right? And as you can tell, if we entered on this candle or this candle, we just had to wait for like 2, 3, 4, 5 minutes, and after that, the price just shut up. Barely any drawdown. So that is one of my entry techniques. 1, 2, 3 with the moving averages and the breaker block. Let me drink some water first real quick. Okay. Let's look for another example. Here's another good example. So let me delete all of these drawings. Check this out. This is 1, 2, 3 right here. And this is what I like about this system or this model, that you can look for this system anytime, bro. You can look for this system in the Asian session, London session, New York session. This system, you're gonna find it everywhere. So check this out. Un right there, right? Dos right there. Tres right here. Now this trade is a little bit more, might be a little bit more difficult for some of you guys to actually see it, but I'm gonna show it to you guys so you can see what I'm seeing. So 1, 2, 3. Why is this the 1, 2, 3 that I'm looking at? Well, also there's a sweep right here, so this makes it even better to me. All right, so why is this 1, 2, 3? Un, right? This is the last down close candle of this swing point. This is a very small swing point, but it is in the end a swing point, right? This high to this low. So this is the last down close candle, right? Look what the price does. It was trending higher, then it came back, manipulated to the downside, and look at what it does. It wicks the previous zone. It makes it an extremity. This is an extremity. It's coming back to the extreme of the swing point. And not only that, we add even more confluence to this trade, or even more confidence, because it sweeps this swing point, this swing low right here, and it sweeps it, and the bodies of the candle that sweeps that low doesn't even close below that low. It sweeps it and it comes back higher again. I mean, that is something that, I mean, the fact that I can look at this and I can notice this also comes with experience. A lot of you guys might be new and you might not see this as an important sweep, but you just have to get the reps in. But anyways, so this is 1, 2, right? Extremity sweeps that previous low, and this is another thing that I like to look at. This is a fractal, right? You see this low right here, this candle, this low, and then you see the next candle right here, this high. This is a fractal. I'm not gonna explain what a fractal is if you do not know what that is. Look it up. Look it up. You have ChatGPT, you have Grok on X, you have all the you have everything. Ask ChatGPT whatever you want to do. This is a fractal, right? In summary, a fractal is a breaker, or it's a fractal is something that I'm seeing on the 1 minute, but it's okay. Let me illustrate it. I think it's better to illustrate it. Where's the drawing tool? Right here. So you see this low of this candle and this high of this candle. If I go even if I go lower, to a lower time frame, this is the 1 minute. If I go to the 15 second, this price action here looks like this. This right here that I just marked, this low is this low. The next candle high is this high. This same candle low is this low, and the next candles are this high. So this is what I'm seeing right there, right there. This is a fractal, something that is this price action, right? This little drawing that I made on an even lower time frame. That's what a fractal is. So this is a fractal to me, and this is a breaker. And remember, on this trade, I enter with a breaker. Right here, I'm gonna be entering with a breaker again. So un, dos. This dos is very nice because it taps. It goes into the extremity of the previous swing point, and it also sweeps this low, right? Dos, and then we have a fractal. We break that fractal with a lot of strength, and look at what the next candle does. Look at this hammer candle. This is my tres. Why is this my tres? Because this candle comes back into the extremity of two, of dos, right? And look, and this is where also a lot of things come into place. A lot of ICT, I remember when I was studying ICT, the ICT videos, ICT was laughing at moving averages, saying that moving averages make no sense. Shut the hell up, ICT. Shut the hell up. That's a lie. Number one. And number two, I remember he used to trash about engulfing candles and pin bars and hammer candles, saying that didn't make any sense. Shut the hell up as well, because candles tell you how the market is behaving, right? So this down close, what I mean is this down close candle, at one point, this candle was all the way down here. It looked like a big bearish candle, but what happened is the bulls came in, they stepped in and bought this candle, and the candle closed, leaving this huge ass wick to the downside. So to me, that is very bullish. Why? Because the bears tried to push the price down, but they were not strong enough, and the bulls pulled the price back higher, leave, and this is a signature pretty much, right? Telling you, okay, the price was trying to go lower, but it couldn't. So what that means is the price is going to go higher, right? It's just a signature. It's not going to happen all the time. Sometimes you're going to see these candles, and then you buy long, and then it comes back to your stop loss. It's going to happen. But a lot of times these confirmation candles, with the right confirmation, with the right context, they work perfectly. And in this 1, 2, 3, we are very bullish. So I would buy this candle right here. I would enter market right there. My stop would be at the low of that candle. Why? Because usually my stop is below the breaker block, but since this candle already wicked it, then I'm gonna put my stop loss at the low of that candle, right? For this time around, the 20 moving average is a little bit above this candle, so in this case we cannot use it as confluence. But since we are looking for longs alongside with the 200 moving average, then you can trust that this trade might work. All right, so I would enter a long right there, and like I always say, I like to go for 1-to-1s. So even if I enter in this trade, right, if I enter in this candle right here, if I enter 1-to-1, look at how low I have to go. Pretty much I would be out of this trade in 1 minute, pretty much, right? But if you actually wanted to target maybe this, let me see. If you wanted to target this candle high, right, this one, it would be a 1.4 hour trade. If you wanted to target maybe this swing point right here, this one, and you place it at that low, it will be a 2-hour trade. If you wanted to target this swing high, it will be a 3-hour trade. If you wanted to target the high of this whole swing point, it will be almost a 4-hour trade. You see? So every trade is different. Some trades are gonna you're just gonna be able to take 1-hour trades. Some other trades are gonna give you 4-hour trades, and that's the beauty of this system as well, right? But personally, I just go for 1 hour, so maybe I would have gone out somewhere around here, and it gave the trade very easily. Maybe barely any drawdown, and my take profit would have been hit so fast. So that's why I have, for this 2 weeks, I have had such a good win rate, because I'm not greedy. I get out, I take my profits, and then whatever happens next, I don't care, right? You see this performance? This is beautiful, and this is thanks to this system. So that's 1, 2, 3. I'm gonna look for one more setup on this video, and I hope that helps any of you guys. Let me look for one more. I want to look for a different trade. I want to look for something a little bit different. Okay, let me go to another day. This video is a little bit longer than I expected, but I think it was worth it to explain it to this depth. Vertical line 1030. Okay, so this market is a little bit different, right? We were in an uptrend, and now it looks like we are starting to go to another way. Okay, this is an 1, 2, 3. This 1, 2, 3 might be a little bit different than the other examples, but let's use it as an example. So this is 1 right there. That high is 1. Then we come back with this candle. That's a 2 or dos. Why is that a dos? Because this 1, right? This 1 was never taken, so that's dos. And then this is the candle, right? This candle right here is the one that came back into un, right? So if I extend that on there, this could be tres right here. Why? Because you can see that this candle came back into the extremity of the previous candle, right? But the thing is that this down close candle that made tres, right? It didn't fully engulf the previous candle, right? So this is the previous candle. It took the previous candle out, right? But this body is not close to the other body, so it's not fully engulfed. So this is where you have to be. This is where experience comes into play. This is where your knowledge comes into play, because this is not an engulfing candle, to me at least. An engulfing candle, I mean, let's say the body did close here, but the wick did close below this previous candle, then I might give this trade a shot. But since the wick didn't even reach the low of the previous candle, I wouldn't have taken this tres. So this is a trade I would have let buy. But that does not mean I wouldn't look for a trade afterwards. So I would mark this low right here. I mean, this high of this candle, right? This high that actually fully aligns with the 50% of this candle that we're marking, right? So let me delete this box. You see, that's the line. So 1, 2, 3, right there. 1, 2, 3. And right here, I would not even wait for a breaker. Why not? Right? I don't see any fractals here. I don't see anything. I wouldn't wait for a breaker. Why? Because this is the other entry technique that I use, which is the turtle soup. What's a turtle soup? Well, look it up again. Look it up on ChatGPT, on whatever tool you use. So I would enter turtle soup, which is a sweep of a previous high, right? In this case, we swept that previous high right here. And look at the bodies of the candles. That's one thing I want to emphasize again, because the candles tell you the story. The candles tells you what the market's trying to do. the candles close right at that candle. I mean, the body of the candle, sorry, close right at the high of this candle, and the wicks are just making the damage. The wicks are just coming up and then come and then the candles are closing below that high. All right. So personally, I would have entered on this down close candle, this one right here, because if you look, this candle sweeps the previous candles as well, and also it fully, the body of this candle fully engulfs the previous candle. Can you see that? The candle high of this candle is the same as the previous one, but the low of the body of this candle is lower than the previous one, which makes me believe this fully engulfed the previous candle. So I would enter short right there. My stop loss would be at the high of 2 in this case because we don't have a breaker block, so I would put it there. I would feel my stop loss is safe up there. I would not feel my stop loss will be safe above this candle because the price can come up, sweep this candle, and then go back lower. So I would not like that. So I would put my stop loss at the high of 2. Again, that's discretionary trading. That is that comes with experience, right? This is not systematic. This is not like, oh, I'm gonna put my stop loss at the same place all the time. No, it depends on the trade. It depends on the situation. Not every trade is gonna be the same, and that's something you have to learn, right? So I would enter short at this candle right there, and again, you see, this is more of a counter trend trade, right? The moving averages are holding the price higher, but the 1 2 3 still works. So sometimes that's also going to happen. Here we have a clean 1 2 3 sweep of that previous candle. We enter at the engulfing candle, and again you can target a 1-to-1 trade. And this candle right here would have given you the take profit. If you are a little bit more, if you want more risk to reward, you can go down here to this candle, that's a 1.6 R, or you can go to the low of this candle, which is a 2.5 R trade. Let's look for one more example. Let's zoom out a little bit. We have a huge push to the downside. Here's another trade right here. I'm not going to explain so much on this one. I'm just going to show you what the trade right here. 1, 2, breaks above this fractal, comes back, wick stab fractal. That's I will put my stop up over there. 1R. You see that? If you again, if you don't want to target 1R, if you want to be a little bit more greedy, you can go up here, and at least for this trade, or you can even target a 200 moving average right there. That's a 3R. Eventually, it would have given you that 3R. 1, 2, 3. Oof, this one looks very beautiful. Check this out. I would not have taken this trade because it was too close of the 200 moving average, but it's up to you. 1, 2, 3. Extremities. See that? This wick comes back deep into this previous wick. Fractal, enter right there. If you didn't want to enter that fractal, could have entered on this breaker right here. And this is an engulfing candle right here. Stop right there. 1-to-1, or even higher. You got the idea. That's basically what I trade. I hope you understand what the way I look at it. Un, dos, tres. I hope it was easy to understand. If you didn't understand it, then maybe this is not for you. Again, I encourage you to watch Pepe videos. That's everything you need. Also, I would suggest Stoic Trader. He helped me out a ton. All of these confirmation candles, moving averages, all of that, I learned it from Stoic. And the system, the Un, dos, tres, by Pepe. That's it, guys. That's all I'm gonna tell you. That's all I'm gonna teach you. This is all you need. This is all I need. You can find it. You can find multiple setups every day. So if you miss this one, you can catch this one, and yeah, I'm sure you can find another trade somewhere in here. Actually, as I'm saying that, look at this. Un, dos, tres. Each swing respects the previous one. See that? Anyways, so that's it from me. I hope you found this video insightful, and if you have any questions, make sure to ask them. Do not ask me what's un, dos, tres. Do not ask me what's extremity. Do not ask me if I can make a 5-minute video. I'm not. Alright, take care. Bye bye.